I want to get to the story here. So a lot of people think that a dovish Jay Powell could do something for the housing markets. You disagree. Why?
Well, I just think long-term interest rates are going to remain elevated, just as we saw after the Fed cut 100 basis points at the end of 2024. Long rates went straight up and have been around those levels since. I think there's a global aversion to taking on long duration, and long-term interest rates are higher across the world. Yesterday, the UK 30-year gilt yield closed at its highest level since 1998. So I think those looking to buy a home should not necessarily bet that they're going to get rate relief with a cut in short-term interest rates. Now, if you buy an adjustable rate mortgage that's more sensitive to the short end, then maybe. But if you're looking to lock in a 30-year, I don't think you're going to get that much relief upon rate cuts.
All right. So right now, 30-year is at about 6.59, basically 6.6. What do you think could move rates lower, or is there some other catalyst for the housing market that could create more movement in the housing market where people are willing to sell and move to new places?
You really need a pickup in the supply of existing homes. And to really be big picture here, you really need baby boomers to downsize. That is where most of the existing home supply needs to come from. Yes, the builders like Toll, like D.R. Horton, we need more supply. But the affordability challenges remain, and I don't think the builders can add enough supply to really normalize this market. It has to come from the existing home market. But on the other hand, if we did get a more existing home supply, if we did get a decline in home prices, which would actually stimulate the demand, well, then that would be a negative for earnings of the home builders. So It's sort of a catch-22 here with this industry right now. That's sort of upside down economically.
Right. So, Peter, I'm sure you understand this. There's so many people with a mortgage under 5%, even under 4% right now, including baby boomers. It's really hard to move because your mortgage is going to go up, even though you're, quote unquote, downsizing, as you're saying. So that doesn't seem like a likely setup, at least not in the near term. What do you think of Berkshire Hathaway is seeing in these home builders without any clear relief? And again, as you mentioned, even if we see this, the most dovish Jay Powell we could see, that short-term interest rates, which may not directly impact mortgage interest rates.
Well, I think Berkshire and other bulls on the builders are hoping that you do get lower mortgage rates that would stimulate the demand. The problem, though, is the lessons we learned over the last 20 years. If you just stimulate the demand for housing via low mortgage rates without a coincident increase in supply, all you get is higher home prices that offset the benefits of lower mortgage rates. You need both lower mortgage rates and more supply at the same time in order to increase the activity in terms of transactions in the housing market.